Hi, all, Benny from East West. Look, I just thought I'd take a look at the S&P. Obviously, there's a lot of conjecture at the moment as to whether or not we're actually got the low in, or if we got more downside to come. So I thought I'd just take a look at the market from both perspectives and sort of see if I can offer you something to think about. So we'll start off with the bullish case, because I think it's pretty easy to make the bull case at the moment. The first thing I'd look at here is that we've made almost exact 50% retracement, and we rejected there very quickly and very nicely. And when you're looking for lows to buy, that's a pretty good setup. Now, when you look at the next movement, let's just come in a little bit. When we just look at this sort of next movement here, we've got a very nice move down here to the 50% retracement, and now we're threatening the top of this swing. So as a setup, that's pretty nice, I would have thought, for the bulls. Anytime I sort of see a structure like that, I think long term I'd probably be reasonably inclined to put pitchfork on it like that, just to sort of harness any geometry that we can grab off. And then of course the basic premise of this is that we'll eventually get this center line as long as this pivot holds. So that might be something you'd like to lay over your longer term chart, or maybe even you just want to, for now, just look at the potential geometry that we might get off this. Come in here a bit closer. Obviously we're on a weekly here. If we just came back down here to a daily, you want to make this pretty exact. I think if you're doing geometry, that's the actual high there. If you're doing geometry, then you want to make it, you want to get exactness. So this has struggled to hold the bottom of this pitchfork, but certainly that's what I mean about just getting everything precise. You just want to get it right on, because if you're talking about maths, you don't want to be grey, you want to be exact. So even though we've sort of struggled to hold the bottom of this, there's something here. You can see this faint midsection of the pitchforks offering some pretty good trend resistance there. Nonetheless, that wasn't the main point I was going to make. That's just something for the side. I think just at a basic level, the main things that I wanted to point out, of course, is that we've got the big declining trend line, which has been ruptured, and the 200-day moving average, which we've now closed above. So they're all sort of box tickers, I think, for the bullish case. And then you could even say, just like the pitchforks we had going in there, we've got an uptrend going in there now. Obviously now we've just got these tops in here that the market's trying to threaten. So and we're close to breaking through that. And then finally, just once again, basically, we've got some very stark divergence off this low on the RSI on a weekly. So, there's a lot of box ticking to go in there. And if we just even pull this down to a daily thing, you can see here that this line is just the bull market line, 20% off the lows. That's pretty close as well. If we bust through there, then we're in a bull market. And then you can just make the argument that we've got this sort of swing structure that's gone in here, but if we sort of do this, well, then you can say that we might have broken this pattern of lower lows and lower highs, and then all of a sudden we've put in a higher low, and then we're making a higher high, and the structure's changed, and that would be a very valid thing to think. So just on those basics, then yes, there's a very strong bull case there. So we're going to make an Elliott wave sense of this bull case. I think you'd sort of, I'm of the view on the biggest view that this is a new wave one, and that this is a wave two that's gone in. Now there'll be a million ways that you can divvy up this correction. You might have a W here, you might have it here, you might have it here, you might have a WXYXZ. I think it's kind of spilt milk under the bridge now, for the bull case at least. But the one thing that troubles me is that I think this finishing movement is a 5. So, does that mean that this is does that mean that this is part of a 3 wave? I would tend to think that. So then what's this, etc., etc.? I'm not sure. I don't, like I said, I think if the bull case is going to prevail, I don't think it matters at this point. But I think then the bulls, at least from what I've seen from people who are sort of counting it this way, they're now suggesting that we've got an impulsive move up here for a 1, that we've probably come back here for a 2, and now we're on our way higher. Now, I think for that to be the case, you've got to make this an impulse where we've got an extension in wave 1, I believe, because if you look at wave 1 off wave 2, then it's, it's longer than wave 3. I think this is just as it sits. I mean, otherwise you maybe you're thinking that this is, I think that's the way you got to do it, and then you've got to go flat here because this looks like a nice 3 with a nice little internal 5 in here. But this bit's, I think, a bit tough. I'm not sure how you deal with that in a count sense, but I think as it sits that you've somehow got to find a way to make this 1, 2, maybe 3, 4, 5, something like that, which to me is a little bit off. I'm not very sure. I'm not in love with the idea that because of this, I'm not in love with the idea that this is the start of a big impulsive move. It doesn't have that feel to it for me. I'm not in love with this. So that counts for me. That counts against this being the start of a bull movement. But again, if you just like to keep it simple, why would you not think that this is a market that's about to break out? Because everything else, I'm not looking at the volume or anything like that, but everything else would suggest that it's destined, the way this is gone, that it's destined to break through this bull market line and that the low is in. There's a lot saying that it is. So you probably didn't really need me to point out those bullish factors because they're kind of staring you in the face. So can I make a case against this? Well, yeah, you can always make a case both ways, and I think it's often not a bad idea to do that, just so that you've got a scenario you got a plan for any scenario, and you just make a plan for up, a plan for down, and you just see which one looks like it's working out the best. But the first thing I'll do is, through the week, Michael Burry pointed out, everyone's been looking at the fractal of 2009 in an effort to try to map out what's going on here, but he sort of pointed out 2001, sort of the tech wreck, and that, to me, it looks like it draws some very interesting similarities to what we're seeing here. So this is the fractal of that movement. Now, once again, be careful with fractals. Just because something happened in the past doesn't mean you're going to get a carbon copy repeat, and I'm not trying to suggest that you will get a carbon copy repeat. But we often say that history doesn't repeat, but it often rhymes. So do we have something rhyming in here? Well, when I sort of drag this across, to me, there just looks like some similarities between sort of what's happening here and what happened here. Okay, they're just these sort of tops that came in. I might just change those boxes. And you might think, well, they're not the same. Well, what I sort of did, what I found interesting is that when you put the trend line on this like that, if this had been the 2001 market at this same sort of point, and you did the same thing, you might have been looking at this thinking, well, we've had this big low, which would correspond to sort of this big spiky low here. You get the point. And we're busting through the trend line like we are here, but then all of a sudden the market turned around and took another big leg down. So I think the point is that just because we've got this busting of the trend line, that doesn't make it a slam dunk that it's all over. And the history of the lesson from 2001 here is, I think, reasonably stark. That, you know, we've got something similar happening here. You can almost just see the shapes. You've got here and here. You've got these 2 points here. You've got these 2 points here. It's not meant to be exact, okay? It's just supposed to be kind of similar, just in the way that it's sort of moving. So there is a little bit of similarity there. It's not a slam dunk either way, but like I said, the lesson here is just because it's ruptured that trend line doesn't mean it's a slam dunk that it's going up. And just looking quickly back at that period at 2001, this is the time we're talking about. So the other similarity here is that once again the market was just trying to get above the 200-day moving average, but the one stark difference we've got here is that we didn't have the RSI divergence that we have today, and you can see here that this is where the divergence came in. So that weekly divergence, it's so often a strong signal that we're going up. It sort of flies in the face a little bit of the argument that we've got the fractal going in here. So that's why I said you've got to be careful. While there are some similarities and some of it's quite stark, there's also some differences that count against it. So like I said, history, it doesn't repeat, but it often rhymes, and often. So does that mean that it's going to rhyme this time, or is this going to be doing its own thing? Just also on this weekly view, I'm just looking at the Ichimoku overlay, and you know, to me, I need to see the market get above the cloud, which it's got a fair way to go before that happens. Now, you know, in an Ichimoku sense of thought, that this cloud will slow the market, will slow price down. Okay, it doesn't often race through the cloud, especially when the cloud's quite thick, because what this thick cloud represents is the strength of this downtrend that preceded it. So it's going to take a while for the market to. I just don't think you're going to get candles going straight through. We could, of course, anything's possible, but I just don't think that is what is going to happen straight away. You can see here we're a little bit away from our moving average line, so we are running a little bit hot, which the daily RSI will tell you. And also we've got Chiku span here. It's going to start to run into some of these candles again, and that's going to start to slow it down. There's a few, I'm not going to dive into it, but there's a few technical factors within the Ichimoku line of thinking that would suggest that the market is going to slow down here. So then, in a bearish sense, well, how would we sort of count that? I'd kind of think, once again, maybe WXYX, maybe this, because I think this is impulsive still, maybe this is the A wave down, and what we've actually got going in here is some sort of 3 wave up for a B before we get, well, it wouldn't go like that. It would, before we get another 5 waves that come down to finish. So, you know, making the impulse here is, yeah. In fact, rather than it being an ABC, it might actually just be another W, then an X, then a Y wave like that, because the way this is sort of structured sort of fits better, I think, as 3 wave structures than 5. So this would just be another way that you could put it together. Maybe an ABC up here for a W, you know, an ABC down here, like an AB, and then a C down here for an X wave, and then this might fit better as maybe even this is a WXY, sort of a 3 wave swing in here, but anyway, and maybe this is a 3 wave swing and it's finished. So yeah, I don't know, because as we look at the daily RSI, it's not too bad, but the one thing that you've got to think about with this daily RSI is it's just got a bit of a top. It just needs to sort of, even though it's creeping through this sort of 60 level, which is sort of where it needs to get through, it has held 40 on the downside, which is quite bullish. But we need proof. We don't have proof yet. So, you know, this becomes the bearish case that we've just got to go, you know, this is the B wave, and then we're going to get 1, 2, 3, 4, 5 to finish off down here somewhere as a C wave, and then that kind of finishes the whole thing, and then we're going to go up. I think that's how you got to lay out the bearish case. So, you know, if that fractal does play out the way that it did in 2001 or something similar, then that's kind of what you'd be thinking you're going to get. Remains to be seen. Now, even just looking at here, just on a cycle basis, I feel pretty comfortable here that we've got an ICL that's gone in here on the 13th of October. But you can see here that this is the Cutler's RSI, which is a bit different from the standard RSI, but this is showing that the market looks pretty close to putting in a daily cycle high somewhere around here. But I would say there's a fairly solid case, I think, to be made, even though I've sort of taken this. I've been guided here by Malcolm at Norvast, who's the cycle guru. But I get a sneaking suspicion that this is going to get changed. I think what we might end up mapping out is that this, rather than having a cycle low here, even though we broke through the trend line and the moving average, because of what's preceded it, I get the feeling that we possibly they're going to make this the cycle low in daily cycle 1. Now, just because this is daily cycle 1, that doesn't mean that this can't fail as a daily cycle 2. It certainly can. We could always get something that bends around like this to make a daily cycle 2, and then maybe we fail one more time to make the yearly cycle low. So that'd be in the bearish case. And then, of course, in the bullish case, we would make a low that doesn't fail, and then we'd break through the high again, and then you'd say, okay, well, then this is daily cycle 2, and we're still going. So that's kind of how it looks on a cycle perspective. I think if you want to have a look at weekly cycles, maybe check out Alex at Erlovsky. He, I think he's just put some weekly cycle views of the S&P up. So you can check that out, and some of his thoughts there. Very handy, very good analyst. He can sort of lead you on the right way if you're looking at cycles. And so that's kind of where I'll leave this video. Like I said, you can make the bull or bear case. I think the bull case looks very simple, straightforward. The bear case is probably leaning a bit more on conjecture and sort of looking at more factors that are in play in terms of, you know, there's more rate rises to come. The Fed's not done. You know, earnings are pointing downwards. In some instances, that unemployment's probably set to rise. Things like that. But in a word of caution to that, I'd just say I've just seen too many times in history where you can find plenty of memes about it, where the stock market and what's going on in the real world don't correlate. So, look, you know, make your own decisions. It's up to you. Hopefully, I've just pointed out a couple of different things that might get you thinking. And if I have, great. So, thanks for watching, and see you next time. Bye.